Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today I've got a pretty good one for you, so you're going to want to stick around and really hear me out on this one. I know that a lot of guys have been really pushing everyone to be a moon boy again. I mean, they did the same thing, here, here, here. They did it the entire way down. And I'm just thinking that maybe we should take just a little bit of caution, towards that kind of advice because these things do tend to just flip in half a day. You know what I mean? We are in a macro downtrend. The market, as I've mentioned, since all the way since back here in November, has pressure on it from the macro economy to the downside. And as bullish as you want to be on the daily because of some 4 hour move, a lot of these guys are just going to get you wrecked. Now, does that mean that there aren't ranges that you can trade, which are going to be perfectly logical, trading ranges? No, absolutely not. In fact, I believe that I went over several times that we actually hit one of my buy boxes, one of my DCA boxes for the bottom of the market. We hit my first buy box. And so, I had been recommending buying at that 25K level for several months, whereas other people were saying, "Ah, just buy the dip up here at 57, buy the dip up here at 50, buy the dip at 43, buy the dip at 38." No, no, no. Buy the dip, under 30,000. And that 25, to 30,000 was a pretty good DCA area as far as being our first DCA area. Now, can the market turn bullish and perhaps that's the only DCA area we get? Yeah, and then we start buying on confirmations. Do we have real confirmation of bullishness now? No. And so just keep that, kind of concept in your back pocket because it is possible that we retest our lows and it is possible that we drop further. Now, a couple things that I want to mention are on the economic calendar this week. Of course, we do have the European Union is going to be making a decision on whether or not it's going to increase the interest rates for the Eurozone. And that's important because, of course, the world is trying to fight inflation right now, and it's not easy if only the United States is really being serious about it. And the United States being serious about it is one reason why the dollar has just been shooting up. And as you can see, the dollar had a bullish retracement which allowed some things to pump for a while. Ever since mid-May, we've been pretty flat on the chart on the Bitcoin and some of these other assets. But, we did pump, and sometimes when we got that kind of scary drop, and then the dollar dipped, and so Bitcoin pumped. And then look, we did it again, right? So this is going to, be a battle where we have the macroeconomic pressures of these federal reserves, including the European Union now, which I believe the only debate is whether they're going to increase by 50 basis points or 75 basis points, right? The economic situation in Europe is, to put it frankly, dire, okay? The US has a good economy. We have a strong, robust economy. But the European Union, the Eurozone, is very weak and very fragile right now. And so these decisions are going to be weighing heavy on the market. And we just don't know what the final decision is going to be, which means that the market has not priced in, the highest of those interest rates. And of course, there may be some shock. Now, the fact that these Federal Reserves are announcing ahead of time that they're going to be increasing rates, for example, we pretty much can expect that the US Federal Reserve is going to be increasing interest rates by 50 basis points for the next couple Fed meetings, okay? At least for the next two meetings, they've signaled that they are going to be increasing rates by 50 basis points, which is a pretty significant amount, but not as much as some hawks really want them to. They want that 75 basis points. And, you know, so the combination of, Europe and the United States now fighting inflation could end up, you know, it could end up muddying the water for the dollar and the euro. So we are not 100% sure what to expect on that. Part of this softening in the dollar may be that there's expectations that the euro may recover some strength if the European Union starts to get serious about these things. On the other hand, we now will have two Federal Reserves from two major economic zones really fighting inflation, which means there's going to be more downward pressure on stocks. And so I'm still keeping, an open mind to the possibility that we do drop at least one level lower. You guys know my targets. I've been, having this on the chart for quite some time. And so if we do end up just rolling over and falling down to these levels, it's probably because, of what the Federal Reserve is going to do on the 15th, what the European Union is going to be deciding. I believe it's on the 9th. If you're from Europe, maybe you can correct me if I'm wrong. I do believe it's the 9th. And then, of course, on the 10th, we actually have the United States and China as well, I believe, are going to be releasing the consumer price index information about how inflation is going. So we have a lot of moving pieces on the table. And if it feels like Bitcoin or your favorite assets are kind of stalling out, it may be just because they're kind of waiting. We're in this kind of holding pattern while the entire world, Europe, the United States, China, Russia, right? These different bread baskets of the world, like Ukraine, we're all in these, fluctuating circumstances, and it's all very bearish for risk-on assets such as technology, especially cryptocurrency being the riskiest asset of all. And so, as we look forward, right, we can have some optimism, and there is good reason to have optimism. Let me just show you, mm, what we're kind of competing for in terms of levels right now, just on a market pressure, just purely the market itself. Let's go ahead and look at some of these CME gaps that we have open on Bitcoin. And of course, we have this gap somewhere around 35,000, and then we have a gap newly created from this pump as the dollar was falling rapidly. Bitcoin pumped rapidly, and so that's somewhere around 28, and a half to 29,000. And if we come back down here and kind of, test the range lows and scare everyone while closing that gap and then pump up to fill the gap up here, in my mind, this is what I'm looking forward to, okay? Us doing something like this if the dollar continues to fall because Europe makes indications that it looks like it's going to get its house in order. Now, we don't have the final word on Europe yet, and so all of this is still a little bit up in the air. It is possible that we just, come up here to trend, and then we finally break out and get this one, and then shock everyone later, right? And then maybe we pop back up, or we continue to break down. But the point is, I'm not pushing anyone to buy. I told you here I was just going to wait and see. I did not expect altcoins to pop off on this one. Altcoins did not pop off on this run up, and so that was something a little bit unexpected to me. But of course, you can take your risk with whatever assets you want. I just recommend using stop losses. The current dynamic is obviously one where we're having these, fits and starts, and so you're never sure exactly where you are on these pumps and dumps as we head forward. And it's better just to wait until some of this information is sorted out in the big scheme of things, we're very low here. You didn't miss out on anything down here. You're not missing out on anything here. It's okay if you're just, thinking about it and making your strategies, figuring out which coins you want to buy, figuring out, the timing of it, and what is a good confirmation for you, looking to see like how the market is going to treat these CME gaps, how the Eurozone, how the United States, are going to sort out their economies, how Russia and Ukraine is going to sort out. It's okay to wait for these things. We have plenty of time, okay? If we start having a bull market, you're going to really notice it. Right now, we're not really doing that much. We're still in this overall kind of downward, radiating pattern where ever since up here, the market has honestly just been, going down. And, we've been tagging these levels perfectly. This is just kind of an interesting thing. You guys know I made this back here, and I've just been watching it. It's just interesting how these channels tend to, continue to exist. Um, we have had these Wyckoff patterns. I was giving warning about them, where we had this kind of accumulation pattern in the summer, and a lot of people were saying, you don't know what you're talking about with Wyckoff, those kind of things. But sure enough, it ended up being completely true. We had the spring and the bull run and everything, but now we've put in this pattern, which I did call, I believe, in this area when we got that up thrust. I said, hey, this is a Wyckoff pattern. I actually called it on stocks. My friend Athena said, well, wouldn't that make sense that it's also happening on Bitcoin? And of course, that's why it's so great to have friends, because we can just talk those things out and boost each other up. And, we did find these signs of weakness, and in indicating those signs of weakness, I hope that I saved a lot of people money. I hope that you guys were able to protect your positions. Everyone was saying, we're going to go to the moon again. Like, this is such a bullish path. We're going to go to the moon again. But sure enough, we ended up having the markdown, right? So the question is, have we marked down enough? Because you can only be bearish for so long. At some point, you have to kind of wonder, you know, did the move play out? And are we now going to be in some kind of accumulation, right? Well, there is some evidence for accumulation. This has been a fairly bullish area right here, and it's harder to see on Bitcoin than it is to see on stocks. So let's go ahead and jump over to the NAS 100, where you can see we're potentially actually developing a bull flag, right? There could be a measured move that takes us all the way up here. And let's just jump through some of these. Despite my bearish outlook on the macro economy, we do have the possibility, because I don't want to bias you guys, I want to show you all the possibilities, but we do have the possibility that we're putting in this type of a flagpole, and then it could reach all the way up here to this trend line at least. In fact, that's quite a coincidence, isn't it, that it goes right to the trend line where it could possibly be rejected. And I want you to kind of consider this area, as it is fairly interesting if we take a look at some of these CME gaps that we have on these charts. So in case of the QQQ, we actually have a gap all the way up here, which could potentially be a stretch goal to be filled. Now, these are 6-hour gaps. They're not as strong as daily gaps, but they do tend to get filled. And just like on Bitcoin, we have an open one right here, right below our consolidation range. So what would that suggest to you? It would suggest that perhaps we dip down on the NASDAQ before we go up to reach this area and potentially fill it. In fact, people could get quite shocked. They could think, oh no, we're going to hell. And then suddenly this chart just turns around and makes a beeline for levels that people didn't really think were possible. Okay, so with all these things up in the air, I'm not going to tell you guys just to like over invest in a bunch of things. This was my DCA area. I told you this is where we should DCA. As for this level, that's a judgment call. This is my minimum threshold level, right? Like I honestly don't want to buy at this level. I want to buy below that level. But of course, having thought about this so much, a lot of people may have made the same conclusion that I made. A lot of very thoughtful people would come to very similar conclusions. And so maybe they are accumulating at these levels because they're all front running each other on these excellent price levels below, right? So there is a very strong possibility that this was the bottom of the market. And I'll give you even more reasoning for that. Um, but just to finish the thought, but we could end up just like on the Nasdaq, which I was showing you, like dip down, fill that gap, and then just shock people as we come up here, fill this gap. Maybe bullishly, spurred up, and there is the possibility we could continue to go. But just my personal thoughts is that we'll probably be rejected and come back down, test the lows again at least, and then we'll have to watch from there to see if we have any signs of strength. But I still believe that we do have a limitation on this chart, and so I'm just going to follow that logic until it gets broken, right? I'm not ideological here, I'm just doing my best. So, okay, let's go ahead and get rid of those. I showed you the CME gaps. I think I can leave those there. Just take off the Wyckoff. One thing that I wanted to propose, because as I've been looking at the differences between the Bitcoin chart and the stock market, you can really easily understand that although Bitcoin follows the logic of the stock market, really the stock market never had this first, kind of peak, right? It did have that, it did have that kind of, lull, and this was kind of like a hiccup for it, but it never had that kind of first, wave that Bitcoin had. And so, what if this was just like crypto exuberance, and we just don't consider that at all? And then we consider about the patterns that might be put on the Bitcoin chart if that first exuberance had never existed. It's almost like people were front running the blow off top, and I've covered these concepts many times where I told you that I believe that this was premature and that it was actually, we actually were meant to have a blow off top to about 100,000. But these really diabolically devious, planners that the billionaires hire and the institutions, cultivate, the market makers, all these guys, they are so clever and they could project what the stock market was going to do. And instead of having Bitcoins blow off top, they took it for themselves early on. And then they ran it up again, knowing that the market would be fooled into thinking that there was going to be a market crash, as there usually is, after a blow off top. And so this completely faked out the crypto market, which is not used to these type of double, top patterns at all, at least not on Bitcoin. And I think a lot of liquidity was saved for the market makers and the big institutions by doing that fake out. But maybe we can see something behind the veil of this. And so, what I've just been thinking to myself, and I've not seen anybody else look at it this way. I'm sure other people have other patterns, but I just noticed that we had kind of a modified bat formation here. I realized that the stock market is, printing a kind of a Gartley, and this isn't really ideal. But considering that this is a highly manipulated market, right? I think that we can, in general, with a high degree of error tolerance on these patterns, because hey, guys, harmonics are just fractals. Okay, like if you can tease fractals and different patterns, different triangles and wedges and you know All these things, if you can tease those things, you can tease harmonics too. And you can fudge them a little bit, okay? I know that those guys like Carney, they're very purist. Of course, they also develop the patterns, but it doesn't mean that there aren't other types of patterns that are very similar to the ideal ones, but with some modification. And what we can see is that, of course, this was a run up, and we can just kind of take it from this kind of area to the top of the market, where this was just kind of a deviation on the path. So just ignore this, as I already pointed out on stocks. And this type of a bat formation, a bullish bat formation, would actually suggest that we should be going here. So I know that there are a lot of formations that people are looking at that maybe target the $20,000 area, and those are more ideal. I don't know if it's a Gartley or if it's a bat or whatever they're looking at, but there are harmonics that suggest that $20,000 area. I would just like to propose that there is a modified bat formation that could have a liftoff in this area, and that we are seeing it, and that it's not a coincidence that we had this strong wick down here precisely to this area, and a strong wick down here precisely to this area, as it would suggest, a kind of, modified bat formation. And you guys in harmonics understand what I'm talking about. You probably understand that I'm totally taking liberty with these things, but again, this channel is about being open-minded to the permutations of the market. I'm not looking for just copying what everybody else says, okay? And if you think about it, and if you look at this drive down, and how drive down to the drives down to the B point, and how drives down to the D point on these type of formations tend to work. And I think if you examine the price action in this area, especially this deviation over here, right? Just look at this price action, and you will find it's highly consistent with bat patterns. I'm not a harmonics expert. I do just a dabble with it every now and then, and that's why I'm perhaps a little bit more flexible on these things, because it's not my main form of trading. Therefore, I don't need to be perfect on it. But if you are considering this, just understand that with wiggle room, this was a strong sign, right? With this drive and this drive on a modified bat pattern, this was a strong sign to go long at this point. So I don't want to spend too much time on that. Just I find it interesting to look at things in a new way. That's why I look at fib circles, I look at fib channels, I look at harmonics, look at fractals of all sorts and patterns, and just keep them in the back of my mind. Put them in my back pocket just in case. Just in case it helps with thinking about the next step. Because while people were freaking out here, if you had had this in your mind the way that I do, you might have actually been quite bullish, at least at this point. Nobody knows where it's going to go up to. We could suggest perhaps fib retracements, and you can see that we got this kind of rejection at the 236. But having put in this formation, at least you would have known to perhaps take some profit at the 236, even if you wanted to target the 382 or even the 618, right? Like if you were particularly bullish. And conceivably over time, you could target the 168 up here at 120,000, which this type of a formation would suggest eventually would get there. I believe that would be more of Carney's perspective, the developer of these type of patterns, at least a lot of them. And but personally, I would say take your profit, because that's the motto of this channel. Take your profit. Always be taking your profit. Don't sit on it. Don't wait. We're in a macro downtrend. Always be taking your profit. And if you had bought here, I would have just told you take your profit at this fib. You could perhaps hodl a little bit in case we get to these higher levels. But you can always buy back in, right, after you take your profit if we end up breaking some levels. So, or on a major retracement, which I recommend to you, of at least 15% on crypto. You probably don't want to be taking it every 5% because you're just going to get a bunch of screwy trades. But if you have a retracement of 15% and 20% comes up quite often on the Bitcoin chart, then you tend to have bought a very good deal, right? And then you can cash it out on the next 20% pump. Wait for the next 15% retracement, cash it out on the next 15 to 20% pump, right? So there you go. That's my advice. Not financial advice, just advice to myself. I am just sitting here in this chair and room alone, talking to myself. And if you guys benefit from it, happy to help. But again, I'm not your advisor. Let's see. Of course, we can continue with this type of thinking and look how we broke through the fib circle, right? We were kind of bending down, just like over here, and almost just like summer. That's quite interesting. I didn't really look at that. Almost just like in summer, we broke through the fib circle and kind of touched back on it, and now we're bending around again, and we're pretty much doing the same thing. We broke out of the fib circle, we bent back to it, and are now kind of putting in some type of new formation. Where will that take us? I don't know. It could take us all the way up and then all the way back down. You know what I mean? Like, if we just did some type of, fib circle fractal, where we're putting in this kind of like summer action, and then we had a pump, and then we came back down, then you could suggest that perhaps something like this, right? And who knows, right? Something like that. I don't know, right? I'm just suggesting. I don't really believe in fib circles. I just find it interesting to look at them because they can inspire some thoughts. And then we also have, I think I already showed you a downward channel that I had made before, like this one. We also have another angle that also seems to be respecting levels very well. It's just amazing. You can draw these things from so many different angles. And these levels, look how they get respected. Look at these levels. You guys know I had this drawn for a long time. Look how these levels get respected, right? I mean, not perfectly, but so close, so close. You can almost even imagine this thing just coming down here, filling in that CME gap, and either breaking down to this level, or holding this level after a wick down and breaking back up to here and then perhaps working its way back up, right? So you can understand like why I keep these levels even though I'm not primarily trading off of them, these channels. They're just interesting to look at. And even this wick all the way because this was drawn out before this formation was put in. I just extended it. But look how this drop came all the way to the bottom of this channel, right? Just very interesting. Very interesting. That wasn't even the purpose of this. It's just I'm just following it as it goes along. Of course, we do have, this kind of current setup here, and perhaps I could put on some of these areas of support and resistance, at least that I feel are fairly resistant for various reasons, whether they're fibs or whether they're, actual supply or demand zones or whatever. But, I would expect this to be a big DCA area below us, and then some type of stretch goal down at the $18,000 to $20,000 area. But really, I would hope for the, definitely checking back to 25,000, but perhaps as low as 22,000. And I would suggest that if you missed this DCA area, you probably want to catch this DCA area. When we would get there, I don't know. It could be as late as September, okay? Like price action can really move around. I just showed you with the fib circle, like we could do like something crazy and then we come back down, do kind of a backfill. Oops. Do kind of a backfill on this price action, maybe fill in the CME gap. I'm not sure if we actually filled it in, that lower one. I think we didn't. Should probably put that on the map as well. But we could come back, fill in that CME gap, and then take off. In fact, let me just go ahead and take a look at that CME chart. And it is 26 to 24 and a half. So let's go ahead and just copy one of these bad boys. To 26 to 24 and a half, something like that. So we do have this major CME gap here. Let me go back to that chart because maybe we filled it enough and that's why I didn't draw it out. Let's go ahead and get this one. Oops. Let's use this. Let's get our CME gap color there. And on CME, wow, so this wick, I mean, we covered it halfway. Man, that's tough. We covered the CME gap halfway. So, I mean, I would consider that filled, to be honest. I've seen plenty of CME gaps filled, you know, slightly more than halfway, but this is exactly half. So, okay, we'll leave it as a stretch goal, but to be honest, I don't know, man. Like, this thing doesn't have to be filled. I think this is a very weak motivator at this point. I think that may have actually filled the CME gap. And, you know, people can say whatever they want about it, but it got half filled for sure. Just make this a little bit lighter to remind me that it was half filled. I don't know if that's like a supply and demand zone where, you know, if it gets half filled, it's not really that desirable anymore. But yeah, that is interesting. It is interesting that it didn't go the full move. But hey, you know, that may suggest that we just double check the bottom. We do that kind of backfill, maybe quarterly backfill. Who knows when we get back down to these levels? Again, it could take months, guys. Macroeconomics plays out slowly, right? So it could take months. Oh, wow. Wow, Bitcoin's been dropping quite fast. That BART has played out. I was having a debate yesterday with one of the traders who was suggesting this pump could take us, you know, all the way up to like, you know, 40K or something, and I wasn't feeling it. But I don't know. We could both end up being right. Maybe my instinct on this, you know, kind of barting around was, you know, well, it absolutely was correct now. But then perhaps his bullishness concept really does play out. I want to double check the Nasdaq. We're not, yeah, we're not moving here. Oops, I should be checking this. Yeah, we're not dropping that much. But, you can see that we did retrace that whole move, right? But this is still a bullish pattern. I don't see anything particularly bearish here. It doesn't look great, but it doesn't look terrible either, you know? We just have to kind of wait and see. It's kind of this hidden drive of bullish divergence. I don't know if that already played out, but well, anyway, we're gonna just have to wait and see, okay? But yeah, you know, guys, I was expecting it was going to be a fake out. I didn't really want to try to push anyone to try to buy or anything. Again, you guys know I was saying buy these levels, right? Back when we were in that area, and or to buy the bottom of the range. I was saying, you know, you could buy the support here, or we have this line right here, which was the channel that we were in. You could buy that support and just have been playing it consistently. There was no reason in my mind to buy up here at all. That didn't make sense. I know a lot of people were doing that. Or to buy up here, I don't understand that logic. You want to buy close to the support, the bottom, you know, 1/3, bottom 1/4 of your, you know, whatever channel you're looking at. And then if you have one of these extreme, you know, these extreme moves, it tends to be a good gamble. Especially if you hit your calculated DCA point. So that's, you know, that's the channel that we're in. We're still in there. Of course, I have this red background just because that just reminds me, don't buy up here. And then, you know, we have this CME gap up here. If we fill that, you know, I'll just remind myself to take profit in that area because it could be a market maker thing and we just turn back down. And also we have those kind of those fib channels, right? Which have been just deflecting us consistently. And so, of course, I have a harder line up here. And if we did break above 40,000, it would be quite shocking to me. But, you know, it could happen. I showed you what's possible in the markets. As far as indications go, so I had made a system a couple months ago, which has been pretty accurate. This was kind of like a heads up. This was a sell signal. This was a heads up. This was a strong heads up. And then this was a buy signal. Like all of that worked out. Back here, I didn't follow it, but I wish I did. I was a little late into the market, and also I was a little bit late selling, you know, back in that May. I was pretty ignorant about a lot of things back then, to be honest, which is partially why I'm creating this channel, just to do better and push myself forward consistently. I also had a sell signal here, and I was telling people that that was probably going to be the max, 53,000. It was correct. I didn't take my own signal. I don't know why. I lost a lot of money off of that move. And then I also didn't trust my buy signal. I had a buy signal here, and I didn't trust it until up in this area. So again, you know, this was a new system, and to be honest, I was not the most consistent during this period. I have since become very consistent, and I did act in a very disciplined way up here. I also called this confirmation. Um, both this one actually, I called this one and this one in my friends group. And so we did have a nice run with that. I did actually have a sell signal using my system up here somewhere. I'll just put it right there. And I just didn't mark it out. But you guys know on this channel, I was warning everyone about this point. And let's see. Then I told everyone the last point to get out would probably be around here, hopefully saving a lot of people's necks. I actually did get a weak signal off of this right here, which I wasn't really looking at this method anymore. I've moved on from this method, but I am still tracking it because it does have some reliability. Um, Here's the thing. This was a hard confirmation. Like get the F out of the market. This was come back into the market. Like get in. This was get out, get in, get out. This was muddy. This was saying, yeah, I'm not really sure that you should get back in. You can do it, but I'm not really sure. That's the type of signal pattern I was getting. That's why there's a question mark right here. And I'm getting that again in this area. I have not gotten a get back in signal. I haven't even gotten a hard confirmation using this, a hard recommendation using this system. So like this is like screaming at me. This is a thick one. That's just a solid line. And then this one is like very serious, like warning, like you should be in the market. And the thin one is just maybe you want to get in. So this was a good trade, but it doesn't say that you necessarily want to be holding on to your position at that buy point. So my system doesn't really say that we're going for it yet. And so I've been looking for other types of systems because I'm not really sure what the difference between this point and this, this area over here was. Why did I get a stronger confirmation here, but not here? Not sure. Not sure. And also, it would have been nice to have some type of signal on this area. I did end up marking that as a DCA point, but I just did it out of my own logic. My system didn't actually give me that heads up. So I've been looking for a better type of system, and I actually made one, as I mentioned to you guys. I made a new type of system, and this one is interesting because the new system that I made, let me just take off these things. The new system I made actually told me strongly get in on this dip to 25, right, to 25K. It said buy now. And then it actually gave me kind of a warning of over here. You might want to add to your position. I got another type of warning. You may want to add to your position with a third type of warning. These are all different types of warnings. To, you may want to add to your position. And then I had this kind of late signal that said you may want to add to your position, which I don't think this is the strongest one, but that's why I'm observing 4 different ways. And then this green one, which is a new type of system compared to the previous method I was showing you, it actually showed add to your position up here. And so far, this green system has been the most reliable. And, if I had bought here, added to my position here, and added to my position here, I would have been really well off, right? So this signaling system is working out. And again, as I track this, I might start to share it with you more and more. I absolutely did share this signal with you. I told you guys, like, don't be freaked out about that. And I absolutely did share this signal with you guys. I did say that was our DCA box, and you should have bought in there. But I shared this one. I did not share this one just because my faith in the market is a little bit shaky, and I know we have all this stuff coming up with the Federal Reserve and with Europe and all those things. So I wasn't sure. I didn't want to get anyone wrecked, and to be honest, you probably would have been breaking even only anyway. Plus, I don't really want to be a call system. I just want to kind of share the journey that I'm making and the systems that I'm developing, and hopefully one day they become reliable. They seem pretty reliable so far. But in order for this to actually work well, I'll also need some type of a sell triggers, and I just don't have that yet. Selling is my worst skill set, so you can use fibs and just sell at every fib line, or you can just sell at resistance. But as far as like holding, I wish I just had a better system to know you should hold this for a longer period of time versus you should, sell as soon as possible, even though you got a buy signal. You should sell as soon as possible, right? I'm just trying to figure out a system that works best for that. If you guys have any ideas, let me know. Let's see, and then I had a third system, which I shared this one with you. That's the yellow bar over there. And this one, of course, was the signal that I was hunting for these 2 weeks, which I saw a pattern being put in very similar to this in the different indicators. And I just thought that there would be a key moment that it's going to come to an apex like this, and the signal will fire off. Sure enough, we got that signal, and I told you guys about that before this move, so hopefully some of you were able to catch that move. But that also was a fairly reliable indication, and so kind of represents a third system. We do have this potential bear flag still printing, and of course the measured move from that could take us all the way down here, which if you look at our buy zones, that would take us into that $22,000 to $23,000 buy zone. So if we do end up just dropping over the way that we did up here, right? You can see we had a strong drop, we had a pump up, kind of fake down, pump up, fake down, another fake up, so maybe another fake up or a stretch to this area, and then maybe we come back down, fulfilling this flag. When this type of a pattern is printed on the charts, it usually carries out. There is some weirdness with this wick, and I think any bullishness in the stock market could override this pattern. But for now, I'm just going to leave it on there. But I do want to just mention very clearly that it does somewhat contradict what we are seeing in the stock market. And usually when crypto and the stock market are in disagreement, I'm going to prefer the stock market, which is actually printing a bullish flag. So it might end up breaking down like I have marked out here. That's my expectation. But it is printing the possibility of a bullish flag. And so I don't want to dismiss that, or at least I should just say these are in contradiction. And we could even consider that perhaps, this was kind of a bull flag and that we still have the potential to get into this area, right? So this wick could be printing kind of a bull flag. This is kind of like mixed messages, sort of. So I'm just keeping this to remind me, sort of like that harmonic and sort of like the fib circle and those other things. A lot of these patterns, a lot of these fractals, you know, it's just to conceptualize your entries and your exits. It's not really fate, you know what I mean? Moving forward, let's see, kind of remove those things. Just wanted to show you what our signals were saying. And by the way, like this is a lot of add to your position signals, right? Like if this is a fairly bullish string of signals, I'm not really getting super, super bearish signals, okay? I kind of feel like, this move isn't done yet. This area isn't done yet. I don't think we're just going to drop off of a cliff. I do think we could get scared. But right now, my feeling is we're more likely to do something like this. And that's just my gut instinct telling me that, okay? Based upon what I've seen before. I still need some kind of bearish signal. Let's see. As for the alpha origin channels, my origin channels here do seem to be playing out. There's a clear midline here, but I'm not going to draw it. We can understand we're in this area. And it's very interesting that the CME gap is here at this line. This CME gap is at this line, and this CME gap is at this line. It's very weird, but okay. Um, Yeah, so right now we have the battle of the CME gaps. Will it be the top one, the middle one, and the lower one that are filled first, or which one's gonna win, right? Who knows? Let's find out. Of course, this was the buy box that that was filled, and then this was, an area. I just put this on the chart because it was it was a good purchase area during the summer, but I don't have that much faith in it. But obviously, we're there. So if you did want a DCA in these areas, it's not like you're getting a bad deal and everything. It's just personally, I felt that we could go lower. Really, I don't believe we're going to get too much lower than these areas if we do continue down. And in fact, I might even just believe that 22 to 23 is the bottom, to be honest. Something tells me that 22 to 23 could be the real bottom, and if not, maybe we've already hit the real bottom. That's just my personal feeling. But I'm quite open-minded to a global recession and perhaps expansion of war in Europe and different things like that that could just bring us down to these lower levels. And so, of course, I have those buy boxes there. One thing that we can consider, and I showed you this in another episode, is that we do put in these kind of toppy formations. These toppy formations do tend to indicate where the bottom of the market can go. And, just conservatively, the toppy formation that we had over here would suggest, it would suggest that this is a bottom at 25,000. Now, there is a circumstance where if this blow off top, if this was meant to be a blow off top and we kind of got this early, but in reality, like we should have been here at like 100,000 or maybe 120,000, who knows? Then conceivably, conceivably, let's see, what do I have here? Maybe I deleted that. But there is the possibility that there's an even more extreme kind of move that could suggest deeper, right? Like if 100,000 was really the level we should have reached, and we just kind of like had some market maker shenanigans over here, then perhaps the head and shoulders would actually be breaking down to around 18,000. These things have worked out here, they've worked out here, and I actually showed you all the way back to 2011 using a different chart on a previous episode. And so just be open-minded to that there might be some shenanigans at work here, okay? Like there may be some real advanced level 3D chess going on, and that people have figured out this stuff maybe. I've never seen anyone else talking about it except me, but I'm sure other people have. But if people are thinking that this is the bottom, but actually there was a hidden blow off top in that it was kind of like stolen here, as opposed to letting it naturally play out by rounding the system, then that drop could have been actually to 18K, right? So, I don't want to overemphasize that because it's not really what's on the charts, but can we consider it? Yeah, we can consider it, okay? Put our dunce hat on and consider that perhaps that measured move is actually to 18K. But as it is right now, it would suggest that 25K was the bottom, just if these like historical patterns have anything to do with it. And again, like you may say, well, you didn't catch the wicks here. I'm really just looking at this line graph, right? Because that shows the kind of a little bit more of the strength of the move there. So yeah, we wicked past it, but in reality, the top of the market did measure down to right there, right at the bottom. Top of this market measured right down to the bottom of that COVID drop. Top of this market is measuring right down to that wick. And hey, maybe if you didn't DCA there, where I had my first DCA zone, maybe you missed the bottom. And maybe that's just how it is. Or potentially that fake out is actually happening and maybe the bottom really is that 18K. This has been such a tricky market and the world is so screwy that you have to be open-minded to both, guys. You have to be open-minded to both. Just a moment, gonna shut my windows. The neighbors are being kind of noisy. Holy moly. And let's see what else can I go through here. We also have these kind of like arrow formations that get put in. And if you look at our current drop, it actually does line up with a pretty good arrow formation similar to what we've had in the past. And that would be quite bullish. I'm not ready to call that or anything. And you can kind of see we're kind of making that kind of pump where maybe we check back to those levels later on, maybe end of the year, and then we start to break out. That would be pretty cool, guys. That would be pretty cool if we could get into that 22 to 23 range, just kind of dip below this kind of wedge, and then break out and have our next runs. That would be amazing. And then maybe in the future, we might have some type of, check back, some type of, kind of like what we did here, where we just have a quarterly backfill or something to just to check these levels or whatever you want to call it. And then we continue on for the next cycle, sometime, 2024, 2025, whatever it is, right? But this would be my bullish projection. So if you guys are wondering if I'm ever bullish, this would be my bullish projection. And then perhaps, that 28,000 is maybe your best buy later on if you missed these moves, right? But let's see, can't really call it in advance, but if you did want kind of a bullish outlook, this would be my most bullish outlook that I've ever probably presented to you guys. Except for back here when there was the possibility that we were breaking out, and except for, before we had a rounding confirmation where I was suggesting perhaps we could go higher. I also was lusting for that 100,000, right? But of course, quickly came to reality and was warning people to get out of the market. Let's see. Let's go ahead and move those off. That would be quite a nice. This would be quite a nice outcome for everyone, guys. I hope it comes to fruition. But yep, those lower levels are possible, especially as the world is crazy. But you can see, I'm not that bearish actually. I have this model marked out. I don't have the other models marked out. I do have this pattern that I did do using calculations of that type of blow off top. And, you can see it's very similar. It's very similar to this one. This blue pattern here. And this kind of pink pattern here. Like they're very similar. But this is using kind of math, right? And geometric pattern finding. People were laughing at me. Like there was a few people who were actually laughing at me when they saw me drawing out this and sharing this concept. But hey guys, look where we are. Like I was making this pattern and these projections all the way back here. All the way back here. They're like, that's nonsense. This isn't gonna happen. What are you talking about? You're crazy. Perma bear, blah blah blah. Like all sorts of names, just attacks. And I was saying, guys, like the math checks out. Like we're gonna hit this area. And I had two areas marked out. Let's see, what is that? I haven't changed this at all since those months ago. And that area would be the dead center would be our current price, right? Around that 30,000. And then the middle of this box is actually 20. It's actually our wick low. The middle of this green box is our wick low. The circle was where your best opportunity to buy would be. Like if you just accumulated in these areas, like you'd be pretty well off. And it's supposed to match with this area over here. So that's why it's higher than this box. But then the green box is your actual buy zone. Like you should buy within this box. And the range of it is 20,000 to 25,000, ish. Um, Slightly up. There we go. The range of it is 21,000 to 26,000, let's say. And then the middle of it, of course, is that $25,000 area, 24 to 25. But yeah, like if you wanted kind of a geometric math-based approach with, it might not make sense to you. And also fibs were involved in this and other things. Um, this would be it. And we've hit that area. So if we have a confirmation of it, or even a little bit wick lower, I mean, guys, I can't be overly bearish, right? I can't just be biased to the bearish side. I have to give you some hopium also. I have to show you the bullish models as well so that you don't miss out and so that you can make your decisions. Of course, you can wait for confirmations on the move, but you know, yeah, yeah. If you wanted to have bullish concepts from me, there it is, and decide for yourself. So let's see, what else do we have here? Anything interesting? The fib channels, already showed you those things. That's about it. We're still locked under this one particular fib channel. We'd have to really break out of it. Is there any wonder why we got kind of rejected in this area? Maybe my angle is slightly off or something. I don't know. But this fib channel has been pretty reliable as a deflection point, and we're really going to need to break through this area strongly. I can imagine double bottoming before we go out, even triple bottoming, but just like we had kind of a triple bottom here. But if we do that and we start to accumulate, you know, with a bit of a higher low, those kind of things, especially if this is higher than that, it could be a good sign. But I'll also be looking at my signals just to see if we get any really good additional signals, and I'll try to share those if they come up. This might actually end up playing out. So that's my bearish perspective, guys. I don't always share, that's my bullish perspective. I don't always share bullish perspectives because I wanted people to protect themselves since the top of the market. But now that we're towards the bottom of the market, I also want you to protect yourself in terms of not missing some good chances, if they happen to come up. We don't have confirmation yet. There is a good chance that we could double bottom, perhaps even triple bottom. You don't just get one shot at the bottom. The price may slowly rise, just like this green bar is rising. The price may slightly rise, but you usually get a couple shots at the bottom. So you can make your decisions. There's another chart that I just want to double check on. Sometimes we look at the Grayscale Bitcoin Trust just to see what it's doing. And I did suggest that it would probably chop around just to see what the smart money is doing here. And again, it's just the same thing. It's putting in a similar type of formation. I did suggest it might, chop around before we end up taking off. The price isn't falling here. It's actually lifting. So it's a good sign. But yeah, I would just say that they're in pretty good sync right now. That's all. So nothing shocking there. Again, the Grayscale Bitcoin Trust was a nice indicator because it had a lower high in November, whereas the regular Bitcoin chart had a higher high, kind of fooling people into thinking that we were going to just go higher. But this one had already been giving an indication that we were potentially going to go lower. And not only that, we also had a lower low put in January. Whereas on the Bitcoin chart, that was a higher low in January, kind of fooling people into thinking that higher highs, higher lows, yeah, we're going to go to the moon. But the Grayscale Bitcoin Trust, the smart money, was saying, kind of bearish. Lower high, lower low. Probably going to continue down this channel. And who won? The Grayscale Bitcoin Trust won. Okay. That's my alpha for the day. Again, you know, possibility for some bullish outcomes. Keep an open mind. The Federal Reserves will make their decisions, this month, and we can kind of start planning around them. We can kind of get an idea of what the world's going to expect and whether or not we've reached peak inflation in China or the United States. It will really matter. So the 9th for Europe, the 10th for China and the US, and then the 15th for the US decision. Again, that was your alpha for the day. Stay safe and happy trading.